Happy Fed Day, December 10th, 2025. The conference is underway. We're going to have an announcement at 2 p.m. Eastern and the press conference after that at 2:30 p.m. Eastern. So I'm over here on CNBC, my site of choice. I'm used to going to it for my financial news first. And I saw this little article here that caught my eye. Fed risks pushing 10-year yield to danger zone for stocks if Powell and company are too hawkish today. So we're not going to dig into this article. It's just the headline that got me. And I was like, hey, let's go look at the yields charts before the Fed announces, and then we can revisit them after. So we're going to look at 30-year yields, 10-year yields, and 5-year yields with their trade station sort of proxy symbol, which I'll explain. We're going to look at price action, market timing, and momentum because I'm HEMA ready. That's what I do. Let's dive in. So here is TYX.X. So if you read up here, it says 30-year Treasury bond interest rate. However, those interest rates here, it's a factor of 10. So if you're seeing this reading 47.78, then the actual interest rate is 4.77. Get it? Cool. Okay. Setting that aside, let's just look in on the chart. One thing that concerns me is that the yields have been going higher since October 22nd, but they are back at this resistance. And I say resistance with air quotes because the value of the yield is going to always be determined by the pricing of the bond, right? And that would be like the bond futures you could look at. I don't want to go back and forth between both types of charts. Just understand that if you're studying a fixed income chart, you have to be careful what language you use. In Wall Street, we would never write support and resistance on a report about yields, okay? We would have to talk about it a little differently. So to keep it consistent with my trading tribe language, I will say support resistance, but air quote, okay? So there's resistance at 48.41. So between that and the RSI Power Zones, my favorite momentum indicator, being at the bear resistance power zone and starting to turn lower. Plus, and it's not shown on the chart, there is forecasting resistance here. Okay, so those of you who use loss forecasting, you know that the forecast has a dynamic stretch, right? It's not just the one point. There's other points along the way, and we're hitting one of those points. So all things are pointing to, depending on the catalyst that we get from the rate announcement, I think we're more likely to turn lower from here. Now, how much lower? Well, first we would have to actually break below a couple days ago low, okay? So that would be the yield low from December 5th at 47.59. If that happens, then we could see our way back towards 46.36. Again, that's the 30-year yield. Now we're going to look at the 10-year. The 10-year chart is TNX.X. It works the same way. And this is also in a little bit of precarious position. But as you can see, based on the move higher in yields since October 21st, in this case, it hasn't reached that 50% quote unquote resistance. So one could argue that the 10-year has a little more room to run, but that price resistance or that resistance level alone isn't enough to be a magnet to pull it up into the right. Right now, I'm concerned that the RSI is back at the bear resistance power zone, which has dominated since May 21st, okay? And we are back at the 42 area with this red candle forming. Now, no matter how today's candle closes, okay, we can still take intraday indications to get ready. So if I had to make a call on which way the 10-year is going to go in the short term, right, next couple of days, I think it's likely to move lower, but it needs a bit of confirmation. And in this case, there are two matching lows here, December 8th and December 9th, that it has to get down below to make a journey back towards its most recent low, which is here from November 25th, okay? So let's round this out with a 5-year. Now, this is FVX.X. Same story, okay? Take the decimal point, move it one to the left, you have the current coupon, the current yield on the 5-year note. And this is a monthly chart. And I wanted to do this to show you guys that when you're studying things that have been traded for a long time and they're not like futures contracts that roll over or, you know, stocks of a relatively new company, you have so much history. I mean, look at this thing. 10 years, 20 years. I mean, now I'm going back to, you know, my 20s here, okay? That is a lot of data. And I want you to see that there can be resistance from 20 years ago impacting the chart today. So anytime you're looking at a chart of something that has been traded for a long time, do get the perspective and the larger history. And for me, 20 years is good enough on a monthly chart, so we'll just stick with this. You can see that there was quote unquote resistance from all the way back here, June of 2006, my goodness. And we are backing off after testing it in 2023. Now we'll take this down to a weekly chart, okay? Those save levels will still be there if we want them, but I'm just gonna focus in on the more recent action. Move higher, pull back, move higher. And something I wanna point out is that if you look at the market and you see what you think is an uptrend or a downtrend on a chart, but you don't understand where we might be in the trend, perspective on how long it might last, make sure you save the date. I'm gonna have special training on December 18th at 4:30 p.m. Eastern, where I'm gonna talk about exactly that. I'm going to explain it to you. I'm going to show it to you, and it'll be super helpful. I have a friend who does options trading, and when I showed it to him years ago, it literally helped him in his trading the next day, okay? So right now, let's just focus in on this consolidation that's been unfolding. So on the weekly chart for the 5-year, we have consolidation from that late October 2023 week, and then this May 2023 week. See how everything has been contained by that, right? It's got a lot of action, but really not broken either of those angles. And here in the weekly, it's looking like it wants to pick up, but what is it set up to do for the short term? Because that's what I'm more concerned with, given the Fed news. Also, almost forgot to mention, the tariffs news, okay? So as of me recording this video, I don't think the announcement has been made yet, or maybe it has, but the Supreme Court is looking at the Trump administration tariffs and may make judgment that they are unconstitutional. That would be a big deal. And frankly, I don't think these markets, okay, the bond markets, would want that to be the case. So right now, what we're looking at is just more the technicals, but I just want you to remember that when you're trading something like bonds, you have to very much be on top of Fed speak, Fed actions, whether that's their Fed funds rate, which they think affects interest rates, but in my personal opinion, it doesn't really. That's a story for another day. What affects money flow more is their balance sheet, okay? How much of US Treasuries do they own and buy versus what they sell? And you've just gotta be in the loop on that news. So when you look at the chart, okay, knowing that these events are happening today, and then looking at the candlesticks, it's the same thing. I don't know if we're gonna drop all the way back. The 5-year is looking like a little bit better, okay, the chart. But let's look at that same retracement that we did on the 30. So I'm just gonna go back to the most recent extreme high. Now in this case, we have it back here, okay, from January. And you can see 50% is ways away. So this market or this security is higher, but not as up against that resistance. Still though in the short term, more likely to move a little bit lower, although I would want to see it get below the low from December 8th in order to really hone that in. Because with the news from the Fed, we could get a really choppy intraday set of action around that 2 p.m. Eastern mark, but then not actually see a whole lot of follow through. So you always want to see follow through in the daily chart to really know the effect of those Fed news announcements. So there you have it, a tour around 30-year, 10-year, 5-year, and we'll see what Chair Powell says. We'll see what the statement reads, and we'll see, very importantly, what he says at the press conference in response to questions. We'll see what the Supreme Court says. It's a busy week, and then we have December start to get into halfway point. So if you found value in this video, technical analysis, understanding the difference between analyzing a yield chart versus a futures chart, support, resistance, everything else, anything else, go ahead and give this video a like, and I'll catch you in the next video.